B3technologies, or Building Blockchains for Business, is a leading systems developer based in Ontario, Canada, that helps businesses simplify their processes and reduce business costs by leveraging innovative technological solutions. Our trusted brand and strong industry reputation positioned us to be a leader in the fintech industry. Utilizing cutting-edge technologies like blockchain, B3 allows businesses to increase transparency and privacy of customers. B3 and its parent company, ITM, an established industry leader in software development, are always in the lookout for new and innovative solutions to offer to their customers.
Our team is excited to present to you a new system that we could offer to our institutional clients. Based on the study conducted by our researchers, they have noticed that financial institutions are faced with significant challenges in processing KYC or Know Your Clients requirements. Currently, financial institutions like banks do KYC process in siloed systems that lead to repetitive and complex processing, while customer needs to share the same information with different financial entities. Aside from that, the long turnaround time to process and verify the documents make the current process inefficient. Also, the process poses privacy concerns as each document requires transfer of personal data from client server to an external server, which opens opportunity for cyber hackers. In addition, bank customers felt that there is lack of transparency in handling their data. Furthermore, the regulators are becoming more stringent with their rules, and the fines for being non-compliant are drastically increasing. The current KYC process would cost a bank around $500 million in a year. Due to the challenges faced by financial institutions in KYC process, institutional clients are demanding for a more robust and secure way of doing things. Our team would like to propose a system that would provide an enriched, private, decentralized source of client data and a documentation that could help alleviate the bank's need to repeatedly contact customers to submit information. To improve the current KYC process, we propose to use blockchain architecture and distributed ledger technology to make KYC process fast, efficient, and more secured. DLT allows the system to collect information from various service providers into a single cryptographically secure database. Because blockchain ledger cannot be altered or deleted, it is possible to create a system where any customer will only need to go through KYC process once and then use this platform to confirm their identity whenever they need it. It also helps streamline the complex KYC process and reduces the cost of doing KYC verification. In effect, this would further result to an increased KYC compliance. With DLT, we want to create an ecosystem where liability is not in a single organization. Instead, we want a shared responsibility to increase convenience and benefits to all parties, thus mitigating the risks.
Hi, I'm Himanshu and I'm the blockchain expert here at B3technologies. Now, what is a DLT? Let's take a look at the traditional system first. In a centralized system, a custodian or a central entity is responsible to hold the data. So we, as users, we trust them to maintain the integrity of the data or the ledger. A centralized network acts as a single point of failure. The change in paradigm here comes with the introduction of DLTs. In a distributed system, each member of the network will have a copy of the ledger. Now, instead of one single entity governing the data, the entire network now has the copy of the ledger. So the need for trust is gone. Now that everyone has a copy of the ledger, any change to one of the copies won't affect the system. If someone actually wants to corrupt the system, he has to change all the copies at the same time, which is practically impossible. Alright, so let's break it down in a much simpler way. Let's say I'm addressing a group of people and all these people have blindfolds on. Now, say I'm tossing a coin. The outcome of the coin can either be a heads or a tails. Now all these people have to have trust in me. They have to trust me with the outcome, and even if I lie, they won't find out. They would simply agree with me. Now let's suppose these people remove the blindfolds. If I lie now, they can catch me. They no longer need to trust me. The outcome here, either heads or tails, is the ledger, is the data. In the first scene, I am the central authority. I am the custodian of the data. And everyone believes me. This is what is a centralized system. But in the second case, everyone can see the ledger. It is transparent, it is public. This is in fact the essence of a distributed system. People often ask me about the differences between a blockchain, a DLT, a Bitcoin, or a cryptocurrency. The best way I can explain this is using this picture right here. Blockchain is just one kind of DLT. There are other types of DLTs. It can be a hash graph, it can be a hollow chain. Blockchain basically involves a chain of blocks linked together, and information is stored in these blocks. Now, a blockchain can be permissioned or permissionless. A cryptocurrency, on the other hand, is a digital asset or a virtual currency that is secured by cryptography, and it runs on this blockchain technology. Bitcoin is the world's largest cryptocurrency by market cap. So to summarize, blockchain is a type of DLT, cryptocurrencies run on blockchain, and Bitcoin is a type of cryptocurrency. I personally think having cryptocurrencies inside a DLT is a very good idea. A cryptocurrency inside a DLT would serve as a medium to settle internal transactions among the members of the network. Now we are looking forward towards establishing a uniform blockchain network, and we can certainly benefit from cryptocurrency inside our network. It can very well be a dollar, a euro, or a rupee-backed cryptocurrency. But that's not our concern at the moment.
Now let's talk a little bit about our product. So what is our product? What do we offer? We offer to develop a system that operates as a permission blockchain through DLT, creating a private, decentralized system managed by multiple participants across predefined nodes, aiming to create a transparent network of information. Our DLT system will allow banks to collect information from various customers into a single cryptographically secure database. The data will be recorded with an immutable cryptographic signature called hash. The data will then be grouped in blocks, and the blocks will be chained with one another. Ideally, in this system, any customer of the bank or financial entity will only need to go through the KYC procedure once and then use the platform to confirm their identity or update their information whenever it is required. Now, to better understand this product, let's go ahead and look at a visual representation of how our system will operate. This image portrays how the system will work. A customer will upload KYC documents to the blockchain distributed ledger. Institutions will be able to leverage KYC data without the need for a repetitive KYC check. Banks will be able to access KYC documents directly and save on storage and security cost. This product will allow a KYC proof of concept to enable structured information to be recorded, accessed, and shared across a distributed network using advanced cryptography. Our clients will be banks and any other financial institution who must comply with KYC requirements according to FinTrack. Now let's review the characteristics of our system. Integration and distribution of information with greater transparency. Consistent processing standards across banks. Peers will have a single shared ledger for KYC. Private membership. Identity of peers will be known. Multiple identity validators. Remember, attestation has value in this type of systems. It will contain a smart contract that will have a code running on top of blockchain, containing a set of rules under which banks, clients, and other peers will be categorized and identified. Interoperable with multiple bank systems. It can run with different banks' networks. Our system will run by the code of a smart contract. It will be agreed between FinTrack, banks, and banks' clients. The smart contract will be ruled by the requirements of KYC and their guidance of the identification of individuals and entities based on the type of activities and transactions they are overtaking. In short, KYC will be managed through our DLT system, which will allow compliance with country and product-specific rules to efficiently onboard and maintain multi-product and multi-jurisdictional clients in banking and other financial institutions.
In this section, I will talk about the risks associated with DLT and how we plan to mitigate them. Since we are using permission blockchain in our solution, we are already eliminating some operational risks. The first one concerns large energy consumption, which will not happen in permission blockchains, as consensus is not achieved through proof of work and therefore will not require lots of computing power. Another issue resolved is scalability, as the system will be closed loop, catering only to a private network. Privacy concerns are also settled, as sensitive information is not exposed to other parties unless granted access by the user. However, once we roll out our solution to the EU market, we'll have to deal with the GDPR mandate of having the right to be forgotten. This is a regulatory risk so far that cannot be directly addressed since blockchain is immutable. With that, we will be active in seeking out innovations addressing this matter and accordingly modify our blockchain. There are still risks present in permissioned blockchains. Although DLT is secure in handling stored data, a vulnerability that can be exploited is that of private keys. Users can be susceptible to private key theft. To avoid this, we will educate users on how to keep their private keys safe. Another risk area is the use of smart contracts, which are lines of codes that are stored on the blockchain and automatically execute when predetermined terms and conditions are met. Or simply put, they are self-executing agreements. Poorly coded smart contracts can cause technology risks, like in the DAO hack, where an attacker exploited this vulnerability. To prevent this, we will ensure that smart contracts are thoroughly tested across multiple networks, regulations, and other environments where it needs to be executed. Oracles, or external entities that provides input to the blockchain, can also be another vulnerability, as they can send corrupted data, especially in case of cyber attacks on their systems. To mitigate this, we will lay out a proper incident management process, which will enable us to quickly identify and respond to these issues. Also, strong governance standards and business continuity plans will be in place in the event that this situation occurs.
Hi, I'm Sanjana Rajeshpai, and I am the business analyst on this panel for B3technologies, and I will be talking about why DLT is important as a disruptive technology and needs to be studied and experimented by the current players of the financial industry. So why is DLT important as a disruptive technology, and why does it need to be studied and experimented by the players of the financial industry? I think to understand why DLT is a disruptive technology, we need to start with why disruptive technologies come about in the first place. Usually, the traditional value driver of the current technology is not satisfying the people that it is catering to, and that is why there is a disruption or a need for disruptive technology. The financial industry here is crumbling in its own weight, and we at B3technologies aren't telling everybody and the panel here that DLT is the end-all be-all solution for all of the financial industry's problems. What we are doing is we are decoupling the existing system and the current customer value chain, and then creating this completely new system based on what our needs and requirements are, which is much better than the existing one. This brings me to the crux of why DLT is important as a disruptive technology. When we study and experiment with this, we are forcing the other players in the market to reevaluate their understanding and their stance on the trust that the customer has. Because ultimately, the customer is going to make a decision on who he trusts. And this trust has been broken by the financial industry several times over the course of the past decade or so. And the reason they keep coming back to the same old technology is because they didn't have an option. And now, if DLT gives them a safer, better, more economical choice, they're going to take it. And this decision, multiplied by millions of customers over millions of different areas, different areas of the financial industry, is what's going to cause this disruption. Our team essentially concentrated on how DLT fit into our current business and how we can leverage the shift in paradigm to our advantage. We understand that there is a real cost with the amount of effort the organization has done to establish real trustworthy connection and give and use whatever trust this is that is existing to give the power back to the consumer. Our product is going to be versatile, and once successful, it can be scaled to multiple organizations, causing a systemic development where we, our 3 technologies, are the pioneer.